Hello, everybody. Welcome to a new episode of our PennyWise podcast from Lee Enterprises. I'm your host, Teri Barr. And as always, so happy to have you listening in today. Well, as we are getting to the end of another year, hard to believe we're already there, but it is time to start thinking about. How about your taxes? Yeah. And some of the things you may want to do before the calendar flips to 2023. Happy to welcome in today Andy Rosen. Now, Andy is an investing and tax spokesperson with NerdWallet, and he's going to walk us through a couple of great ideas today. Hi, Andy.
Hi, how you doing? Thanks for
Uh,
having me back.
Very, very well. Thank you so much for being here. You know, it's so interesting to know, and it's so difficult to get people to think about tax planning at this time of the year. Everybody's so busy with the holidays and everything. But if you can kind of dive into this a little bit right now, you can actually help yourself out by next April, can't you?
Right. I think a lot of people are going to start thinking about taxes when they start receiving their tax forms, maybe early next year, or even, a couple days before the tax deadline. That's when people talk and think about taxes the most. But at the end of the calendar year, that's really the time when you can make those last couple decisions that might actually affect what those forms say when you receive them.
Yeah, no kidding. How about if we start with some that might work for people, especially right now? What if you want to give to, say, support a charity or make a donation or something? Is this the time to do it?
Well, it really depends on your personal situation. I just want to note real quick that I'm not a tax advisor. This is not personalized tax or investing advice, but there are some really general principles to think about when you're making decisions about taxes anytime, but at the end of the year in particular. The question is, are you doing something that you would otherwise want to do? Obviously, it's virtuous to donate to charity, and it does have a tax benefit. You can deduct donations to certain charities. But you want to make sure that that's money you can afford to donate and that it's money that you want to donate this year. I mean, charities don't just need money at the end of the year. They need money all the time. A lot of charities do depend on end of year fundraising for the reason that a lot of people are thinking about their taxes at the end of the year.
Right.
However, you can decide when the most advantageous time to take that tax benefit would be if you think that donating to charity is a good use of your money. For instance, you might have a pretty good setup for taxes for 2022 already. You feel like you've managed your liability pretty well. You can wait till January 1st and then you'd have a deduction for the following year, potentially, depending on the charity, of course.
Well, and I love your reminder, and it is a good thing to think about that many nonprofits and charities need help year round. But I think sometimes because we get a little bombarded by it at this time of year with the holiday season, we sort of forget. So that was a great reminder too, Andy, to just kind of do what works for you when it comes to that. I love that.
Yeah, I mean, I know for me, I put aside a certain budget for charitable donations throughout the year, and then I forget to use it. And then at the end of the year, I have a lot left to give. And it's kind of fun to just sit around with my wife and, think about what we want to support and just spend the night giving money away like we're big heavy hitters, even though we're not. So it can be a fun activity to have a
Yeah.
tradition or a practice around giving at the end of the year too.
Oh, that's great. Okay, another one of these tips might be increasing your 401k contributions. Now, how could that help you out?
Well, a lot of donations to retirement accounts, if you have a traditional 401k, are tax deductible. So they're pre-tax. If you're donating money up to a certain point to the proper kind of retirement account, you don't have to pay taxes on those contributions until you receive the money in your retirement or whenever you take distributions. So if you're looking to manage what you're paying in taxes for 2022 in 2023, you want to think about, is this a good time to put a chunk of money that, I might have otherwise waited to put in to my retirement. Remember, you're keeping that money, that's money that you're saving. You may not have access to it for a little while without paying penalties though. So again, just think about whether, you have the money available to you. One
Okay.
thing, Terry, that we talked about before and that I think is really important to remember is, decisions about taxes, they do have a real impact on your life, but you want to make sure you're making decisions that you can afford to make and
Mm,
that you otherwise believe are good financial moves to you. You don't want to go all in on reducing your tax liability only to hurt your financial position elsewhere. But that said, for most people, contributing to retirement is a good move as long as you have enough money to do the other things you need to do more immediately.
Yeah, okay, that's great advice. What about a 401k solo? Honestly, I've not heard about this idea. What is it and how could that work for people?
Okay, so this is not for everybody.
Right.
You have to be self-employed or have the ability to start your own 401k plan. But one thing that's really interesting, earlier I said, this is the time when you can make decisions that will affect you next year when you're paying your taxes. This one actually carries over into next year, because if you set up a solo 401k at the right moment, you can actually continue to make donations that will be deductible for the 2022 tax year into next year. So that if if you need a little flexibility with the time you need to make contributions, and you're have the right kind of self-employment income, this could be a good decision. It is complicated. It can be a process to set up, so it's not
Mm.
just a push of a button, but it is potentially a good move for some people.
Well, and I think you've reminded us twice, do what's working right for you. And I think some of these sometimes it can almost be a panic situation for some people. So I think what you're also saying is slow down and just kind of think about what's the best.
Right. I
Yeah.
mean, it is, you have half a month left, at least, while we're talking about this. So,
Right.
you do have
Right.
time to think about it clear-headedly before you run out of time. I
Okay.
mean, there is, yeah, these can be life-changing decisions. I think, for regular people who don't think about taxes all the time, it's important to remember what is a deduction, what's a credit, right? A tax deduction is something that reduces your taxable income. So,
Right.
say you made $10,000 for the year and you donated to charity $2,000. That would reduce your taxable income to $8,000. And then you pay taxes on that lower amount. So that doesn't mean you're gonna whatever you donate would be, one for one taken away for your taxes. That's what a tax credit does. So just pay attention to what the benefit is for whatever activity you're considering, and realize that you may not get all that money back in taxes, but it can be valuable to manage your liability in any case.
Yeah. And don't be afraid to ask questions. Oh my goodness. Find somebody
Exactly.
like Andy to
It is not a bad idea to talk to a tax professional, especially if
Excellent.
you find your taxes complicated. If you're having trouble figuring out what you owe or what your liability might be and how that might affect your decision making, everyone's situation is different. There's lots of factors that can affect it. There's no way that you
Yeah.
can learn about it from one conversation. So, talk to a tax professional, and that's another good idea.
Okay. How about taking stock of your investment losses? I know so many people this year really keeping an eye on their investments. What can you do about this? And then how do you even do it?
Well, there's this concept called tax loss harvesting. What tax loss harvesting is basically taking some of the losses you've made on investments. You have to actually, realize those losses, right? You have to sell
Right.
at a loss in order to, something has to be less than what you paid for it in order to, for that to work. But if you have investment gains and investment losses and you want to reduce your tax liability for investment income,
Yeah.
then it's possible that you can, time some sales in a way that you can reduce your liability, especially if you don't have long-term optimism about whatever investment this is. Again, this is a deeply personal decision, one you can also make with your financial advisor. But, remember, tax loss harvesting can help you. I feel like a broken record, but don't sell, you may not want to sell something that you believe will go back up in value just to,
Yeah.
reduce the amount of taxes you owe. I mean,
Mm.
you just have to make a calculation for yourself whether whatever you'd save in taxes is worth, the upside you might have from that investment.
Okay, perfect. And then what about consider deferring your income? Is this possible?
This is possible for,
Huh.
maybe more of a population than you think, right? If you're a freelancer or something like that, you have self-employment income, you work for yourself, you could, consider, let's say you have a big contract and you haven't invoiced it yet and it's December 15th, you might decide, I'll send that out after the first of the year and then I'll have the income in 2023. That doesn't mean you're not going to pay taxes, right? You're still going to pay taxes on that income. But if
Yeah.
you have decided, it'd be really good to manage 2022 tax bills, we'll have plenty of time to, figure out 2023. I'd like to push that. it's something you can do. And it's not just for people who are self-employed though, right? If you have a good, it depends on your company, but say you had an end of a year bonus coming or something like that.
Yeah.
You could ask, I don't know if they'll do it, but you could ask, hey, could I have this bonus after the first of the year? It would really help my taxes. And some companies may do that for you.
That's so interesting. Wow, we've talked about a lot of different ideas. What would you say is the bottom line, Andy?
Well, again, the bottom line is just going to be you have to decide how much you value the tax advantages of
Mhm.
whatever behavior you're talking about. These have to be things that you believe are good financial decisions for you, taking into account the tax benefit, but not just the tax benefit, right? If you sell a stock because it went down since you bought it and then it goes up a lot next year, you may regret that. Now, you may also lock in the highest price it will ever be and make a great decision and get a tax benefit. But you need to benefit, right? You need to
Yeah.
understand and calculate. No one knows for sure what's going to happen, right? And you need to calculate what matters to you, what risks are you willing to take, and how much do you value, again, like whatever tax benefit you can derive from one of these kinds of strategies.
Wow. That is a perfect exclamation point right there. A great way to end. Gosh, thank you, Andy Rosen with NerdWallet, for all of your great ideas today. We really appreciate it.
It was great talking to you.
Oh, you too. And again, I'm Teri Barr with PennyWise from Lee Enterprises. Always happy to have you here with us. And we'll talk with you again next week.
Need anything else from me?